really lovely to meet you all. And thank you so much for giving me the opportunity to talk to you and meet all of you. Um, so can you still hear me?
Yeah.
Yeah, sorry. So my name is Elle. I am a corporate and commercial solicitor. Sorry, bear with me. I've just lost, there we go, lost my Zoom tab. And I specialize in advising business owners, and founders, entrepreneurs who are either looking to set up, say super early stage, who are looking to raise funding, again, very early stage, possibly even pre-seed, right up to the point of ultimately what everyone would like to do eventually is to sell, exit, and everything in between. So I just wanted to start off today by introducing who I am and just running through, and I think you've been sent, well, I think they were circulated, some of the PowerPoint slides, but I'm going to just talk you through. Perfect. Thank you. Thumbs up. I like that. Some of the key things about what business owners in the UK should typically be thinking about before they start their fundraising journey. And before I go there, I just want to start off with a very simple truth. So most founders start raising money long before their business is actually ready for investment. And the painful part of that is they usually don't realize it until the no's start piling up from investors. Not always, and it's not always a no, but it can be tricky. So today I just want to make sure that you're not one of those founders. So I'm going to talk you through what investors really look for, the signals that tell them that you're ready, your business is ready, and the gaps that can quietly kill a deal. And if you get this right, you're going to improve your chances of raising successfully. So building a company is tough. It's really hard. I love working with business owners and founders because you're incredible people. But figuring out what investors want on top of that can sometimes feel really, really hard, really impossible. But hopefully my goal today is to make that part dramatically easier for you. So hopefully, let's say 6 months from now, when you're sitting across from an investor who wants to say yes, because your business is structured right, it's validated, and you're ready for that investment. So hopefully that's what today is going to be about. So I think initially it's really, really important to clarify in your own mind, even just what your funding goal is. And it sounds really obvious, but sometimes it's worth just having a think about that and really understanding what you need it for. So clearly, is it for growth? Do you need it for working capital, for the development of a product or a particular service? Are you looking to expand and acquire another business? What is it that you're looking for that investment for? And calculate what you need. I mean, it sounds again very obvious, but obviously, as you know, investors, they're succinct, they're fast, they want to know exactly what they're getting for their investment. Think what you need, plus perhaps a little room for a buffer, and know exactly what the impact this is going to have on the trajectory of your business, because that's what they're going to want to know. And you're going to need to know that yourself in order for it to be a successful funding round. So again, obviously, I'm sure you all know, but there are various funding options available. So you can have equity. Now this will start off from, possibly seed or pre-seed. You've got angel investors. You're going up in scale towards venture capital, Series A round, Series B, Series C. You've got crowdfunding options. Obviously, with all of these type of investments, you're going to have to give up typically some equity, some shares, some ownership in your business, to those particular investors. And we'll go on a little bit later about how to go about doing that in the most efficient way and in order to protect you and your business and how to stay in control. You've obviously got debt finance by way of loans, asset finance, revenue-based financing, whereby you retain the ownership, but obviously the company's in debt and ultimately that debt needs to be repaid. And there are obviously certain grants and government schemes. I'm not sure if you've heard of Innovate UK. We've got some good R&D credit, tax credit availability in this country. All of those options are worth exploring. And we're good in this country. We have various options. Tax regime has changed recently. But obviously, we can advise on that separately. Um, any questions?
We're just one question from me.
Yes.
El. Just before Christmas, we had the managing director of the British Business Bank come in and do a talk, which was
Okay.
wonderful. And he did say that the landscape for the debt market during 26 is looking a little bit more competitive and
Okay.
rosier for founders. There's going to be some tension amongst lenders and all of that. So and coupled with the fact that interest rates are expected to drop,
Hmm.
um, you know, if
Interesting.
inflationary pressures keep at bay. So that's worth mentioning at this point. It was a very
Yeah,
good talk, and just to say that there are non-dilution fundraising things out there that we can look into as well. So we always like to give founders, and particularly our members, as many options as possible.
for sure. Absolutely. I mean, that's really, really important. And there are many ways to go about it. I mean, even when giving away equity, there are ways to protect what you're retaining and to stay in control. But of course, that comes down to the legals or the negotiation. We make sure that you're protected. Is there a hand up? Oh no, no, that's my cursor. Sorry, apologies. Yeah, no, thanks, Ollie. That's a really good point. So I think that sort of goes on to nicely into the next section that I listed, which is get your financials in order. Again, it sounds very obvious, but it's all in the prep. So, what's your historic performance like? Get your accounts up to date. Are they filed? They should be. And make sure you've got accurate bookkeeping. Management accounts are always really useful for investors to look at to get a current, more recent financial picture of the company. Obviously, annual accounts are always going to be out of date fairly significantly. Um, and on the flip side, what are your forecasts? What are your financial projections over the next 12 to 3 years with realistic assumptions? We've all seen those really awful, cringing Dragon Den moments where financials have been ripped to pieces and it's just really awful. We don't want you to be in that situation. Um, Cash flow is crucial. How will the funding impact your cash flow? Again, this would be a very sensible discussion to have prior with your accountants, your tax advisors, and me, it's your advisor, legal advisor, and have a really sensible rationale for your valuation. Please don't overinflate or underestimate your valuation. It's really important to get that done professionally, rather than just having a wild guess and plucking figures out the air, because it will be ripped apart. So just get your financials in order, and there are many people that can help do that, in support of you getting to that stage. Um, I mean, hand in hand to that, obviously, goes your legal structure. And this is where I particularly come in. Um, Again, without sounding painfully obvious, just get your company structure in order. Are your filings current and up to date at Companies House? This is more relevant even so now, with the new ECTA Act that's come in. Financial and beneficial ownership transparency at Companies House is now really, really king. Get those ID director verifications done. You've probably been sent emails from Companies House asking you to do it. Just do it. Um, and make sure that all your filings are up to date. Again, it sounds very, very obvious, but a lot of companies that I go into and help and prepare well in advance, things haven't been filed, things have been filed that are wrong. People have left the company, shareholders, directors, but they're still showing as being there. It's just not setting a good example, and it will be really dissected by those investors who will probably be turned off if you can't get your simple filings right. Then it's not really presenting yourself in the best light. A cap table is crucial. it doesn't have to be really overly complicated, but you make sure that you have one, who holds what, and what are the values of those shares? What are you looking at for next year? It's just very basic, but really important stuff. And together with that, I can't really avoid talking about shareholder agreements. So if you're in business with a partner, and you don't have a shareholder agreement in place, please get one. They are so important to have. I always say it's better late than never. And unfortunately, so many clients that I have today, I'm trying to help unravel a mess, whether it's because there's been a shareholder fallout, a shareholder disagreement, or a dispute. I'm not a litigator, but I do try and help where there's a situation where there can't be an agreement between a decision amongst directors or shareholders. And in the absence of having a shareholders agreement in place, it can get very messy very, very quickly. And sadly, recently, I've had many clients who are seeking to exit their business on pretty unfavorable terms because of a pretty serious dispute. And I really don't want you to have to go through that. And that can be avoided. A dispute can't be avoided, but the process in which to deal with it can, if we've got it really clearly evidenced in a shareholders agreement. So please make
We've
sure
got a
that,
question just coming from Wesley.
yes, go for
Yeah,
it.
just very
Okay.
quickly, Elle, just
Mm.
adding to what you're saying there, I think it's really extremely important that people understand articles of association. When
Yes,
you're raising money, you'll probably start your company and you'll have an automatic standard articles of association, but
yes,
that will have limits on shares, what's been issued, and everything else. So, getting your company into a position by doing a board meeting and minutes to cover it, and then adjusting the articles of association to accommodate a large shareholding. If you're doing a
yes.
certain raise, means that you don't have to raise those have all those available immediately, but you need to have the movement of the shares. So most companies start with 1,000, 2,000 shares or something like that, and you know, you need to get into the millions if you're doing a raise accordingly. That's what I was going to say. Just add it on to it.
That's a really, absolutely. I mean, that's a really, really important point. And actually, a company's articles of association, which exactly as you say, when a company's incorporated over here in the UK, they're incorporated with a very generic set of essentially government articles, which is, I mean, generally they're not going to be fit for purpose for a company that is scaling and investing. Um, and a shareholders agreement will sit nicely with those articles. Obviously, articles are a publicly available document at a company's house. You can put as much or as little as you want into them, but they need to be detailed enough to reflect the main provisions in your shareholders agreement. And absolutely, as you say, Wesley, they need to reflect the correct shareholding, the correct structure, what rights are attaching to those shares. Your investors will all, in all likelihood, have a different class of shares to what you may originally have as founder shares. So their class of shares might afford them slightly different rights to what you have. It depends, but that absolutely that needs to be reflected in the articles. So a shareholders agreement will always be done in conjunction with the company's articles. So yes, no, thank you. So that's my bit on shareholder agreements, and I'm always happy to if anybody wants to talk to me about even if you have a shareholder agreement in place that might be a bit outdated, alongside obviously company articles. I'm always happy to just have a look and chat through what you think might need to be done and my initial thoughts on that. So please do feel free to reach out. IP, I can't really not mention IP. IP is always really crucial and it sometimes gets a little bit overlooked. Um, a lot of companies, particularly obviously in the tech space, IP is their key asset. And that's where most of the value of the business is attributed to. please make sure the IP is actually secured and assigned, owned by the company. It's not always an automatic right. And investors who are looking to invest in an IP-rich company, that's the first thing that they're going to look at is where's your IP documentation evidencing that the company actually owns all its IP. And again, it sounds really obvious, but it's an important thing to get right. So feel free to ask me any questions on that. We have some incredible IP expertise within my firm, gunnercooke. I can advise, obviously, I advise on it when it comes to shareholdings and companies generally, but anything that's IP rich, then it really needs protecting. Any questions on that, anyone? No? Okie dokie. So I think due diligence preparation. And again, this is following on from the legal implications here. Be really, really ready, be prepared, and just please make sure that the following things are really up to date. So your contracts. So contracts with your clients, contracts with suppliers, contracts with services providers that you might use, distribution agreements, agency agreements. Again, obviously, if you're a very early stage, you may not have these in place. Fine, talk to me about that. I completely understand the need for, early stage companies can be quite cash strapped. I'm very flexible in the way that I work. I'm so happy to talk through what an investor might be looking at, even at that early stage when it comes to contracts and just getting things in order. Data protection and GDPR obviously being important here as well. Tax filings, I've touched upon that before. Just make sure everything's up to date and filed. If you've got employees as well, you may or may not have any. You may just have one or two, depending on what stage your business is. Where are your employment contracts and where are your HR policies? Have you got any? If you don't, that can be problematic. You don't always have to have a physical piece of paper to denote an employment status. But in the absence of having a lovely, nice, clear employment contract, your investor's going to be a little bit scared. So just make sure those are ready. And again, I can help with any of those. So please don't worry if you haven't got any of those things in place, but they are important. Any questions on those?
One question from me.
Yes.
We've given the current environment of sort of hybrid and offshoring employees and that sort of thing. I think there's real scope for complexity, sort of businesses putting themselves in very awkward positions with potential investment when they've got almost all their staff. I've got one client at the moment where I think they've only got 2 employees in the UK and everyone else is contracted outside the UK. And it's in a situation like this where you suddenly, you described, you walk into businesses and they don't know what they don't know. And something like that is a big red flag to a potential investor.
Mm-hmm. Yeah, good point.
I
mean, are those...
you coming? And what I'm asking is, are you coming across that more? And it's something then that takes time to sort out.
Yeah, I mean, I agree. I mean, you can have employees, you can have contractors. I mean, even contractors will require contracts. So whether it's consultancy agreement or some sort of services provider contract, absolutely. And I think in the absence of having those, then yes, the investor's going to be wary, and you need to make sure that they're done properly and reflect exactly what it is they're doing and what their remuneration structure is.
But also there are issues then of control and confidentiality, and you touched on IP as well.
Potentially.
Yeah.
And I mean, those sorts of really key bits of information, ideally, yes, obviously you can cater for those in the contract. Confidentiality is really, really important. protecting the company's know-how, trade secrets, and things like that. Yes, it's really important to make sure those elements are incorporated into the contract. But obviously, as you say, if somebody is abroad or away from the office, it's very hard to monitor that. And to some degree, obviously, you're going to have to place reliance on the content of your contracts. And yeah, I mean, I think as well, the amount of involvement that those contractors have within the business, what they have access to and what they don't have access to, the restrictions as well, what they can and can't do outside of the business are really important. So that even more reason to get it drafted in a really tight, watertight way will be important for investors to see. But yes, it's a really, really good point.
Thank you.
Emotional and time commitment. Fundraising can take a long time. It can be very stressful, and I completely understand that. It can take a few weeks, a very early stage, up to a year. And it can obviously detract you as a founder away from actually running and managing your business. So it's a time-consuming thing, and nobody underestimates that at all. Which is why it's important to try and make sure that you can pass elements of that to professionals like me, or your accountants, or your tax advisors, and forums such as this for support. It's so important because we are here to help you, and take some of that stress away from you, to make sure that you can carry on focusing on the business, and running it effectively. At the end of the day, you want to get that investment. You don't want to be straying away from the actual core business too much in the actual fundraising process. And that's what we're here to do, to support you with that. Clearly, obviously, expect some rejection and iteration on your pitch. Some of you may have already gone through that process. It can be really debilitating. But I know a lot of entrepreneurs and founders who have a lot of grit, and get back up and keep going. So I know that's a really important element of the whole process. But don't be disheartened. Don't be disheartened. The right investor will come along, and it's got to be. I always say to clients as well, please do your own due diligence on your investors. These people are going to be working with you. They're going to be having a say about your business. You need to be able to get on with them. Of course, it's depending on whether you know them already in advance or not. It's really important. Just make sure you do your DD on your investors. They're going to be doing it on you. They're going to be taking every single thing into account when they come to dissecting your company and investigating it to the nth degree. Please do the same on them. See what they've done before. What types of business have they invested in before, and what's the success of that business? How have they exited? So do your own DD on them.
Wesley.
Yeah, Elle. Just something else on that. I've turned down investment in the past, actually.
Yes.
And there's not many startups. I always find people go crazy when they get an investor on board and they think it's like Santa Claus has come and, or Father Christmas come and delivered
Yes.
that sack of money for them. But turning down investment is very hard. But I've done it, and I've done it for the right reasons. You look at the investor, you say, do they want to match? But another point, I wanted to ask you a question about your company. We've got we've got a raise going on at the moment.
Okay.
A smaller raise, it's about $250,000.
Yeah.
But we've also got then another raise coming down the line, which I'll have to revalue the company in order to accommodate that, which will be in the millions. But we've got a unique situation, is that we've got investors talking to us for the $250,000, many different investors, but we've also got debt finance that's come along, and they've offered us. So does your company work with, obviously I assume you would do, I mean, it's probably a stupid question, but have you got experience in dealing with debt finance agreements and stuff like that?
Yes. Yeah, we do. We do, absolutely. Okay. And Ollie, I don't know if you've I'm sure you've come across that before as well. Debt financing
Yeah,
along
the biggest
yeah.
problem we've come across is that they're looking for like a surety bond. Really, it's effectively the debt finance company is it's very active in the startup market, which is quite
Yes.
unique. It's normally the next stage you'd get debt finance. But they've found a hole. But obviously they like to have an insurance guarantee against it, which is quite rare. Warren, who's the MD of British Business Bank, he hadn't seen that before. But it's just a simple insurance policy that obviously that if they're giving you $250,000, they want to make sure that they're going to get their money back in a certain way. But we've got that on the table now. And
Okay.
I'm just in the process of going through the insurance on that. So okay, I may need to speak
Yeah.
to you
Yeah.
down the line.
Yeah, no, that's really interesting. I'd be really interested to
It's an interesting
know
at this
more about that,
stage.
but
It's interesting to
yeah.
because what it does mean is it puts us in a
Yeah.
position where we're raising 250 on equity, but we actually could end up with 500,000 plus.
Yes.
If we choose to add the debt equity as well, which is quite interesting.
Yes.
So
Yeah, that is really interesting. That's quite an interesting dynamic. Yeah, no, I mean, absolutely more than happy to have a chat with you about that and have a look at things that you might just want to have a cast over. But yeah, no, thank you for that. That's really quite insightful. Yeah.
By the way, can I just
Sorry.
say something? Can I just say
Yes.
something? Are you presenting slides? Because I'm not getting any slides. If you were,
No, I'm not presenting
oh, good,
slides.
that's right. Yeah, I thought something was
No.
wrong.
No. I've got my own notes, but I'm
I
not
thought I was the only one
presenting.
sitting here who couldn't see anything.
No, oh gosh, no.
It was very kind to supply us with some slides and a PowerPoint earlier this week. And we put them on our platform and also put them in WhatsApp. So you should have access to them. Whereas if not, let us know and we'll get them emailed out to you.
So yeah, just moving on and sort of drawing to an end on my input on this really is just the need to think about and be really clear on and actually just going on from what Wesley was saying there, just the impact on the control and culture of your business. I mean, how much equity are you comfortable giving up to investors? And I could touch on that in a second. What level of influence or involvement are they going to have? And how does this fundraising round align with your long-term vision of your company and your business? Because these are really, really vital. And when it comes to obviously investing, how much are you prepared to give up? And I don't mean that, give up, give away, just have no control over. It depends on the investors. Are they going to be taking an active role? Are they going to be on the board? A lot of them want to be. And how much control are you willing to give them? Are you going to retain control at board level? The ways of making sure you can do that are by having a casting vote. If there's an equal number of investor directors on board, some investors don't like that, as I'm sure you know, but it is absolutely something to put to the table and make sure that you have board level control, either by having a casting vote in the event of a deadlock situation at board level, or making sure that you're in the documentation, in the shareholders agreement and the articles, your director vote needs to be passed in order for a decision to be made. And the same at shareholder level. Again, obviously with investors investing and having a minority stake, depending on how much they're taking. Obviously, I'm sure you may have heard, or if you've got shareholder agreements in place, investment agreements in place already, investors like to be able to control as much as they possibly can within the company, what the company can and can't do, their need to be involved in decision making about anything, about taking out more finance, changing the company name, changing the company's articles, entering into a contract that's over a certain amount. Are you going to have them involved in that kind of day-to-day decision? Just have a think about that. And obviously just make sure they're aligning with what your long-term vision is. And this goes back to what I said before about just making sure that you do your own research on those investors. What are they like? What have they done before? Have they been successful? Speak to other founders and just see the extent of the involvement that they're going to have or not, because it might not suit you. Some investors will come along and just, not really have an active role. Some will and want to take full control. Are you okay with that? And if so, just have a discussion about that, and we make sure that the documents are really watertight so that going forward, in the event of any disagreement or exit, then it's satisfactorily covered in the agreement. And one thing I would just like to say that's really important to agree in advance is just how your business is going to be valued going forward. If an investor wants to exit, or even if you want to exit going forward in the future, please make sure there are valuation mechanisms and techniques that you've agreed on in advance in that agreement. So many clients that I advise and have advised in the past where there has been a significant fallout amongst shareholders and investors typically comes down to valuation. And ultimately, we don't want to go to the court for a valuation. It's just a huge amount of time and money that nobody needs to incur. So, yeah, any questions? Any more questions?
Well,
I have one. Oh, sorry.
No, Ollie,
go on, Wesley.
Okay.
You fire ahead.
We're building something big, Elle. So we're small now, but we're building something big. Ollie's actually involved with the company. He's on the board side. So we are only getting investment at this stage in the top company. Okay,
Yep.
but we're having a group of companies. So
Yes.
the company then has subsidiary companies which it owns 100%, but then we'll be getting larger investment into the subsidiary. That's why investment in the top of the ladder now for those investors is very, very good. But what we don't want to do is dilute too much in the top, because the top is the brand. So the brand's at the top, and then we're going to have to put agreements into place that I guess is pushing the branding down accordingly into the other companies, because the plan will be as we acquire and sell companies moving forward, we're going to do a lot of acquisitions along the way, but we're also going to be selling other companies, other brands, and our strength will be our brand name, and that'll be the key point. So I guess, have you guys got experience in that?
In terms of restructuring and protecting the brand, which ultimately, essentially, I mean, that's going to come down to IP as well.
Yeah, there's not a lot of IP in it at this stage. There will be. It's a travel, leisure, and media company, but we have got some IP that is coming down the line, which is some software development that we will be doing that will be unique. So that will probably have some IP in it. To be honest with you, some good IP in it, but that's the only IP that we would see.
Okay. Yeah, I mean, absolutely. And when it comes to restructuring, I mean, that's something that I do fairly regularly, and advising on the best way to structure or restructure a business, particularly in advance of any investment, in a way that's going to ensure that the key assets of the business ultimately are kind of ring fenced.
I mean, because I've got experience, and obviously you can tell I've got experience anyway in what I'm talking about. But the reality is, I'm a little bit inexperienced, shall I say, in the ring fencing area of it. I've done it once before, but I want to really strengthen that as we move forward, so there are no loopholes.
Absolutely.
No,
I mean, absolutely, it's great that you're thinking along those lines, for sure. And absolutely, we can help.
Well, we even have a due diligence area. We have an investors portal that we put up, which is unheard of a small company. But we have an investor.
That's amazing. I love that.
which is like a PLC would expect. But we've done that because we're growing, so we anticipate growing into that point.
But that's amazing, and I mean that just ticks the boxes that I've talked about, and you're obviously very aware and very prepared, which is amazing.
But we do miss things. I mean, you've said something today that I've got in place. Some people have got the shareholder agreement, some people haven't. So I need to make sure, go through and double check, because things move quickly. That everyone's got the shareholder agreement signed. But I'm pretty sure you have it, Ollie. Actually, I think yours was done, but if not, we'll get it sorted. But yeah.
And also the other thing as well, I would say with shareholder agreements is review them regularly, because you can put a shareholders agreement in place at the beginning, of the business and trading and scaling, but actually you look at that in 12 months time, it may not reflect how your business has grown and where your business is at today. So do just keep that in mind. And it's something that I completely understand, that founders often don't think they need to. It's fine, we've got one, just put it in the back of the drawer. But
I think there's two things, Ellie, that people we talk to the elephant in the room here. But at the end of the day, the two things that founders worry about when they start a company is, first of all, have they got the money to pay for a lawyer, right, to do it, a solicitor to do it, and secondly, do that. They don't really know what they don't know what they don't know, if you know what I mean. And that is the point. And I think, as you get older and wiser in the tooth, you know all these things because you've done it, you've got the experience. But even experienced founders like me, that there are things that I know I'm a little bit weak on, or I need to research on. So yeah, very interesting. Okay, thank you very much for the chat, Alex.
Yeah, no, and you know what? I totally get it, and I understand, and I have clients who are very early stage, and who will come to me with something that they've got from Seed Legals or Google or AI. And they will say, "Oh, I've got this already." Fine, I get it. But I'm not saying don't do that, and I totally understand the difficulty in cash flow. But what I would say is, my passion is working with founders. You're all incredible people, and I take a lot from you. And that's why I love to support your businesses. I am very flexible when it comes to things like that. I'm always happy to have a look and support. And as the business grows, we can grow together, and I can give you some pointers and help with the drafting as the business progresses. Those documents might be fine initially, if it's just you and maybe I say another person, but I'd still, get it done right. But for now, it might be fine. As we grow, let's just take another look at those documents and get them right.
It's interesting you said about going back and double checking documents. I mean, I've always done that when you're going around for the next investment round, but it's actually an interesting point that was about looking at where the company is and reviewing the shareholder agreements and also the articles as well and everything.
Absolutely. And your contracts. A lot of clients, I mean, I also advise on drafting, supply contracts, service contracts, T's and C's, that sort of thing. So often T's and C's, again, can be put together from having a look on Google and put it again, it might be okay initially, but really if you're doing well and your company's growing in a 6, 12, 18 months time, those T's and C's are just not going to be fit for purpose. And the last
I think John mentioned earlier, I think it was John, raised the point about overseas contractors. I mean, we're going to be outsourcing certain areas of our company quite a lot now, because I'll be truthful, we want to keep it slim and trim in the UK, but we want to outsource a lot of our services in order to keep good profits in the company and make us. You've disappeared, Elle. I know you're back again. Right? No, you went down and you just disappeared. That's interesting about the how we will deal with international contracted people into the company as well. I need to think about that and look into that as well.
Yeah, obviously everybody loves talking about GDPR, don't they?
Yeah.
I mean, I do. So just it's something that you just need to be aware of as well, and just make sure their contracts are watertight and you've got up-to-date data protection policies on your website, and that your contractors.
Can I ask you something then? I'm sure everyone gets this. We get. I've got a few companies now because of the group, but we get these annoying GDPR government sort of things that come through, and you have to register for your data. It's a letter that comes through. All companies seem to get them.
What, from the ICO?
Yeah, that's it. That is legit, isn't it? I mean, I've always thought it's legit because I've always paid it.
Oh yeah, no, that's obligatory.
I've always paid it, but it never looks legit.
It's obligatory. You might be an exempt business, but you probably aren't. But yeah, no, that's that's fine.
It's just I've been paying them for years, and I suddenly thought I've been ripped off. So
no,
I always forget to ask someone, but that's good. At least you said
that. No, you're on it. You're on
it. Just on a final point, Elle, when it comes to the topic of founders doing their research on investors and identifying investors, there's a lot more resource out there now today than there was, say, 5-10 years ago. and someone we've had on is Rob Cousins from Scribe. And Scribe's a really good resource where founders can go on if they're looking for investors. Look at what these investors have been involved in the past. You can tell if they're active or not. It's a really good resource. Rob's been in a couple of times and done a number of talks. But all of these things can basically complement each other and help each other. Your service, the guys at Scribe, and we're always willing to recommend Scribe to founders who are looking for investment. It is a good resource, and there's others out there in the marketplace today.
Absolutely, yeah, that's a really good point as well. Look at their successes and their failures, because they're going to have failures. They're going to have many failures probably initially, and look why did it not succeed? Why did they not succeed in that particular investment round? So important.
I think, Ollie, I think I might say Rob now he has an option now for actually helping towards trying to find investors. There's an option now. I think that actually his company, because you introduced me to Rob, must be 3 years ago now, but I think Rob actually has a way now to his company also helped target specific investors after going through their data. Yeah. I don't know, but I think I read something about that once recently.
Yeah. That's right. Yeah, he does. So, but it's a very good resource, quite valuable.
That's great.
Live information as well. I think they use. So, yeah.
Well, yeah, that's great. Thank you.
Any final questions this morning? Whilst we've got Elle with us, Spencer.
Thanks, Elle. That's all been really interesting stuff. I'm very aligned with you on all this sort of preparedness. For these things, I've helped businesses on the financial side go through growth to exit, and the importance of getting all of these things right is absolutely paramount. So I just wondered, Ollie, whether it was worth also mentioning the Diligencia platform at this point, because it's a platform for businesses that are on a growth, a scaling, an exit journey, and it allows you to sort of collate your data room, if you like, and all of the making sure that all that preparedness in all aspects, not just financial, not just contracts and legal, but all sorts of things. And my experience with my clients is that they might think, yes, we've got a plan and we're on it, and it might be mostly sort of financial that they follow, but they don't actually collate all the other things together properly. And that's where the skeletons are found in the closet when the actual due diligence starts. So I'm onboarding a client of mine, 2 clients next week actually onto the platform. Be the first ones. I've only just got introduced to it, but I was really quite impressed with it as being a way of actually saying, well, you're not going to forget about this, because this is a whole portal that is showing you your readiness in all of these different areas. So I just think it's fits with what you're talking about today, that people might want to be aware of that. And so,
Spencer, I'm very proud to announce that we got Mark from Diligencia coming in, I think in the tail end of February, to do a talk.
Yes, I noticed. Yeah, great. Yeah, fantastic. Yeah, well done. So if, it's I presume it's just .co.uk, but it's Diligent SIA. I presume it's .co.uk. .co.uk. Yes, worth a look at. I would recommend it, and it's inexpensive.
Right.
If anyone wants an introduction to Mark at Diligencia, he's going to be coming on next month to do a talk through Startup Standup. But reach out to Spencer or I, and we can make the introductions. All right. Mm-hmm. I've worked through it myself over the Christmas through the platform, and it's a great resource.
That's brilliant. I'm just having a look. That's really, really great. A good tool.
Yeah, I think it is. Yeah.
Any final questions for Elle, guys? I think we've exhausted them this morning.
If you've got any questions, or if you ever want to run something past me, then please feel free to do that. I'm always happy to chat and help.
Well, thank you very much, Elle. It's been wonderful.
Pleasure.
Get ready for a lot of love and big ups on LinkedIn, and that will continue into next week. So that'll be great. And it's been wonderful, and you're welcome back anytime. What I would like to do is a part 2 later this year. That'd be awesome. And then we can
absolutely, anytime. I'd be very, very happy
more
to.
into the detail. Yeah, that'd be great. So you're
And
welcome
just,
back anytime.
That's very kind. Yeah, no, pleasure. And I just to introduce, obviously, my colleague Satya is also sitting here supporting on the call. So Satya and I work together very closely. We're both corporate lawyers, and yeah, so we are the duo. We are the team.
Well,
thank you so much. It's been a real pleasure. Thank you.
You're very welcome, and I hope everyone has a great weekend. And we go again on Wednesday. So we're good to see everyone. All right. And
thank you so much. Thank you.
Cool. Cheers, everyone. Have a good weekend.
Thanks so much. You too.
Thanks, Elle. Thank you very much.
Pleasure.
That was awesome. Thank you. Bye.